I'm Bob Bruce of Integrity Wealth Consulting with a special edition, a video update on Britain's recent vote to exit the European Union. With all the market turmoil, we felt it was a good time to share our perspective. Please stay tuned at the end of this video for our required disclosure statement. Now, today we're going to try and answer a couple of questions. What is Brexit and why does it matter? First, how could the Brexit affect U.S. markets? What impact could Brexit have on the global economy? How could Brexit affect the U.S. economy? And what should you, the investor, do right now? Let's start by taking a step back and asking, how did Britain get here? Well, we have to go back in time and take a look at some of the history of Britain and the European Union. Britain originally voted to join the European Economic Community in 1973. Then, in 1975, Britons voted to remain within the new European Community, which then morphed into the European Union in 1991. Economic and political circumstances, of course, have changed dramatically since the 90s, and British citizens demanded a new national referendum on EU membership. The issues at stake were complex and involved British sovereignty, trade, regulations, and immigration policy. Ultimately, the vote was about this: did Britain see a future within the EU or not? As we saw, British citizens voted to leave. Now let's talk about the effect of Brexit and what it's doing to the markets. The vote to leave surprised investors around the world who reacted by selling. This is not expected because the markets hate uncertainty. History tells us that recent market movements are probably an overreaction in response to fear and uncertainty. If we look back, we see that ever since World War II, when there have been political shocks like this, markets have tended to oversell and then rebound very quickly in the weeks and months that follow. The past, of course, doesn't predict the future. However, we can look at some of those similar events as a guide. During the crisis around the Japanese earthquake in 2011, the European debt crisis as well in 2012, markets experienced double-digit losses, then quickly recovered within 3 or 4 months. So far, the markets have rebounded nicely and, in fact, are at new all-time highs in the U.S. While political events like this rarely have a long-term effect on the markets, we should also keep in mind 2016 has a lot of geopolitical challenges. We should expect some volatility going forward and some headline risk. What is that? Headline risk is when the markets overreact to media coverage of events. And we'll talk more about what you as an investor can do at the end of this video. Now let's talk about the political impact, economic impact of the Brexit on the global economy. In Britain and Europe, a lot of risks are political in nature. In Britain, it's possible this vote will splinter the United Kingdom. Northern Ireland and Scotland both voted to remain in the EU, and they may in fact vote to leave Britain in order to stay with the EU. Britain also will have a new prime minister, as David Cameron has resigned. And you can bet that the negotiations around leaving the EU will play a huge role in those upcoming elections, and it could get very messy. Exit negotiations from the EU are also likely to drag on for months and possibly years and be the source of many political footballs. We can expect volatility in financial markets as these negotiations are slowly hammered out. Economists worry about Britain that they could lose a lot of multinational corporations who rely on access to European markets and the free movement of European talent. London, of course, is the center of Europe's financial world, and a loss of those financial firms would be a major blow to the British economy. The fallout from Brexit could be enough to push Britain into a recession. Europe has several key elections coming up as well in Spain, Italy, and France that could be affected by Britain's vote. We'll be watching those elections carefully for you. But one of the big worries is Britain's vote will be the first of many anti-EU votes and could cause a rush to the exit by other EU members. Britain leaving is complicated enough. If a member of the Euro currency union, like the Netherlands or Greece, left, negotiations will be even more complex. No one knows what the breakup of the EU will look like in the future, but it is going to have an effect on some global economic growth. I also point out to you that many economists are very upbeat about what's going to happen in the future. They believe that the apocalyptic scenarios are unlikely to play out. Since Britain and Europe are so close and need each other, future negotiations are likely to be favorable to both sides. European leaders are also a lot more likely to make needed reforms to keep their citizens happy and avoid Britain's fate. Now, the Brexit and the U.S. economy, what's happening there? How will it affect us? That really depends on how the divorce is negotiated. Again, there's no consensus among economists, but here's what we do know. Trade with Britain accounts for just 0.31% of our gross domestic product. So British problems with trade won't necessarily affect us. We don't foresee any structural changes to the U.S. economy as a result of Brexit. Some companies and sectors will be more affected by others, particularly those that have more revenue exposure in the UK. We could see an effect on their corporate earnings. However, the dollar is often viewed as a safe haven in times of international turmoil, which is pushing the dollar's value up versus other currencies. A stronger dollar may weaken demand for U.S. products, which may drag down economic growth. We should keep in mind the fact that the U.S. is a consumer-driven economy and that wages, the housing market, and improvements in personal finances all support consumer spending right now. Will Brexit be enough to push us into a recession? That's not really likely, though it could contribute to some weaker growth for some companies in the next couple of years. We think a major factor will be whether the market turmoil is enough to have a negative impact on business and consumer confidence. If so, we could see a greater effect on the U.S. economy. Britain's vote will likely affect Federal Reserve policies as well this year. Post-Brexit, expectations of a rate increase this year have gone down dramatically. Where predictions of a September rate hike were about 30% before the vote, they now stand at 0%. In fact, some experts even suggest that the rate cuts may be back on the table if economic growth begins to slow down. You want to talk about this. You want to look at this information, but you want to tune out a lot of the noise. We're going to see a lot of terrifying headlines about Brexit, and it's not good for your mental or financial health to be glued to the media nonstop 24/7. Let us filter through some of that news for you and communicate what you need to know and how it really will affect you. It's one of the most important parts of our service to you. Second, focus on your own financial goals. Do you know who isn't leaving the euro or the EU? It's you in America. Political events don't change your goals, and it's critical to avoid emotional reactions to those events. When markets stumble, the smart move is to sit back, take a look at the fundamentals, and make prudent changes where necessary. It's too soon to tell what Brexit will mean for the markets. No one can agree on probable outcomes at this point, though we don't think Brexit is the end of the world by any means, and we want to acknowledge, however, that there could be some risk in certain sectors of the markets. It will be many, many years before the full impact of what has just happened will be known. We're going to closely watch the data, the market research as it comes in, and communicate to you continuously in the weeks to come. And of course, we're always available if you have questions about your personal portfolio and if changes are warranted. We will reach out to you personally if we think some changes need to be made. If you experience any major life changes or shifts in your goals that warrant changes to your portfolio, of course, contact us immediately here at the office at 724-940-9060.